Welcome back to another Wealth Code video, guys. Like, subscribe, and comment if you want to see more of our great videos. What if you woke up one day to find your savings vanished, just like that? This is what happened during the 2008 financial crisis, largely due to Lehman Brothers' collapse. They were once a giant in investment banking, but fell from grace, leaving many questioning how this could happen. Let's explore the lessons learned from this monumental event. Imagine a race where everyone wants to win at any cost. Lehman Brothers chased profits relentlessly, often ignoring risks. They took big chances on mortgage-backed securities, betting heavily that prices would keep climbing. This greed blinded them to the reality that prices could drop, which they ultimately did, leading to disaster. Always be mindful of the fine line between ambition and recklessness. Think of walking a tightrope without a safety net. Lehman Brothers engaged in risky practices, investing heavily in high-risk assets. They ignored basic business principles, emphasizing the need for balance in their portfolios. This risky behavior led them to take on too much debt. Too much leverage is like borrowing too much money for a car you can't afford. Eventually, it crashes hard. Have you ever stubbornly clung to an outdated phone? Lehman Brothers failed to adapt to a changing economy. They ignored warnings and continued investing in risky mortgages, even as signs showed trouble ahead. Businesses need to be flexible, just like we update our technology. If you don't evolve, you risk losing everything when the landscape changes, which is what happened here. Picture feeling secure in your house but ignoring cracks in the walls. Many thought Lehman Brothers was invincible, relying on inflated reports and ratings. They falsely believed they had everything covered, much like assuming your house is fine because it looks good from the outside. True security requires honest assessments, not just blind faith in appearances. Think of a lifeguard at a pool. Their job is to ensure safety, but what happens if they're distracted? Regulators failed to keep an eye on risky activities in the financial sector. It's vital for oversight bodies to actively monitor industries. Like a lifeguard, regulators must be vigilant to prevent disasters before they occur. Their inaction contributed to the collapse of Lehman Brothers. Imagine knocking over a single domino, causing all others to fall in succession. When Lehman Brothers collapsed, it didn't just affect themselves, it triggered a financial crisis worldwide. Banks and investors lost confidence, leading to a credit freeze, hurting businesses and individuals alike. This domino effect shows how interconnected our financial systems are, reminding us to think beyond ourselves in finance. Would you trust a friend who hides secrets? Lehman Brothers masked their financial troubles behind complex financial instruments. Lack of transparency left investors in the dark. Like being unable to see underwater, this lack of clarity led to panic when the truth surfaced. Businesses must prioritize honesty to build trust and prevent misunderstandings in challenging times. Transparency is a crucial foundation for success. What happens when emotions take over in a storm? During the crisis, fear led to irrational decisions. Investors panicked, selling assets at low prices. It's like a ship being tossed in a storm, causing everyone to jump overboard. It's crucial to stay calm and make rational choices, even when the waters get choppy. Emotional control can save money and sanity during unstable times. Think of a sports team relying on each player's strengths to win. Lehman Brothers struggled in collaboration, often competing rather than cooperating. Better communication in finance could have identified risks sooner. It's essential to work as a team, sharing insights and strategies to navigate challenging waters. When everyone is on the same page, success becomes much more attainable. Imagine planting only one type of flower in a garden. If a disease strikes, all your blooms could die. Lehman Brothers failed to diversify their investments, putting all their eggs in risky mortgages. Diversification spreads risk across many investments, guarding against loss. Just like diversifying plants leads to a thriving garden, a varied investment portfolio increases resilience against downturns. What happens when gossip spreads like wildfire? Public perception greatly influenced Lehman Brothers' downfall. Once people started doubting their stability, panic ensued. and the financial ties unraveled quickly. Companies need to manage their reputations carefully. A single rumor can have devastating consequences. Cultivating a positive image helps maintain investor and public confidence, especially during challenging situations. Think back to your school days. How useful was understanding finances? Many people lacked financial education leading up to the crisis. Lehman Brothers' complexities confused many investors, resulting in poor decisions. By promoting financial literacy, we empower people to make informed choices. Education is vital to understanding risks and responsibilities, helping prevent similar disasters in the future. Picture a secretive market operating unnoticed, like a shadowy alley. This was the shadow banking system, where banks did risky deals without regulatory oversight. Lehman Brothers operated in this murky space, creating hidden vulnerabilities. Transparency and regulation in all financial parts are crucial to prevent shady dealings and ensure stability. Ignoring these components can open the door to significant systemic risks. How do you prepare for emergencies? Lehman Brothers failed in crisis management when disaster struck. They didn't have a solid plan in place for handling downturns. Just as we wear seatbelts for safety, having a fail-safe strategy is vital for any business. Companies must cultivate proactive crisis management to ensure they handle unexpected circumstances effectively without falling apart. What if you missed the train because you weren't paying attention? Lehman Brothers misjudged market signals, ignoring warning signs that trouble was brewing. Just like heeding train signals can prevent accidents, responding to market changes can save businesses. Staying alert and informed helps identify problems early, allowing for adjustments before it's too late. Ignoring these signals can lead to disaster. Imagine a car with all the best technology, but no driver. People are essential in banking, yet Lehman Brothers became too focused on profits over relationships. The human element in business adds invaluable insight. Encouraging discussions and diverse perspectives can enhance decision-making. Just like a successful road trip needs a great driver, a company's success hinges on valuing its people. How does technology play a role in business today? Lehman Brothers relied on outdated systems and didn't use technology to its full potential. Technology offers solutions to improve efficiency and decision-making and can help analyze risks better. Embracing modern tools keeps businesses competitive and less prone to errors. Remember, technology is a partner, not an enemy. Adapt or risk being left behind. Consider how personal crises affect families. The Lehman Brothers collapse didn't just devastate investors, it affected millions worldwide. People lost jobs and homes, creating a ripple effect through communities. Every financial decision carries weight. Understanding how actions impact lives encourages responsibility and care in financial dealings. Remember, financial success should benefit not just a few, but the community as a whole. What if we turn past mistakes into future success? The downfall of Lehman Brothers teaches us critical lessons in finance. Recognizing risk, valuing transparency, and embracing flexibility helps build a resilient financial foundation. Let's learn from the past and create a brighter future. If you found value in these lessons, like this video, subscribe to Wealth Code, and share your thoughts below. Join the conversation. For more videos from Wealth Code, don't forget to like and subscribe.